I am Dr.S. Sambath, Assistant Professor, PG and Research Department of Commerce, St.Joseph College of Arts and Science. Today, we are going to discuss the topic about non-performing assets. In bank accounts or in banking companies, non-performing assets is a very important concept, right? Particularly in bank accounts, I am going to concentrate the non-performing assets. In short form, it is used to call NPA. Right. First, I am going to explain the concept of non-performing asset. If you take the banking companies, normally the banking companies used to provide loans and advances to its customers, right? Once it's providing loans and advances to its customers, but the particular loans and advances are classified as a asset for the banking companies, and then later on these assets it generate income or it creates some capital appreciation income to the banks. So they are providing loans, and then those person getting the loans, then they may repay the loan with interest, both principal amount and interest, and these interests are income to the banking companies, right? Okay. Suppose the bank provide loans and advances for its customers. Those person getting the loan, they not able to repay. They not able to repay to the bank over the period of 90 days. Then it is termed as non-performing asset. It means the bank they not able to recollect those particular loans and advances. Still, it's a due or it's a overdue over a period of 90 days or 3 months. Then it is termed as a non-performing asset. In simple meaning, non-performing asset means those assets which cannot or which does not able to create any income to the banking companies, then that is termed as non-performing asset in banking companies. Second one, I am going to explain the concept of types of non-performing assets. In types of non-performing assets, first one I am going to explain standard assets. Standard assets means these assets it does not carry any kind of risk, or otherwise these assets carrying or having low risk. It means these kind of loans and advances, the bank they are easily able to recollect. There is no risk in collecting the loans and advances. So these assets are called as standard assets, right? Okay. It means standard assets have only low risk. Now, the RBI suggested that RBI recommended to all the banking companies even that standard assets also that banking companies they have to create a provisions. It means the RBI suggested that banking companies should create a provision for these standard assets at the rate of 0.25%. Then second one, substandard assets. Substandard assets is one which has been classified as a non-performing asset for a period not exceeding 12 months. It means bank they not able to recollect those loans and advances. Still it's a due or a overdue for a period of 90 days or more than 90 days, then that asset is classified as a non-performing assets. Once it's classified as a non-performing asset, still it's continue as a non-performing assets up to 1 year or up to 12 months, then it is termed as substandard assets, right? And the next one, doubtful assets. It means the banking company classified their dues. It means the dues are the banking company they're not able to collect the dues over a period of 90 days. Then that is termed as a non-performing assets. Then the non-performing assets are continue as a non-performing assets over a period of more than 12 months, then it is termed as doubtful assets. Then next one, loss assets. Loss assets means once the bank identify its non-performing assets, then they take the all type of non-performing assets and then they hand over this matter to the auditors, right? Both internal and external auditors. Then the auditors will verify these kind of non-performing assets. They will verify whether the bank able to recollect those advances, how much they are able to recollect, how much they are not able to recollect. Then they will check all the document. Once they will verify the non-performing assets of the banking companies, then they came to conclusion, okay, these are the assets the bank able to collect this much, and these are the assets the banking they not able to collect fully. Once the audit team identify these assets they not able to recollect fully, or these assets the banking companies they not able to recollect never, then that is termed as a loss assets. It means these asset or these loans and advances the banking company they not able to recollect never, right? Now for all kind of these non-performing assets, RBI suggested that if the banking company having non-performing assets, then for safeguard the bank, to strengthen the functions of the bank, to strengthen the financial position of the banks, the RBI suggested that the banking institution go for the provision against these non-performing assets. So once the banking companies have a non-performing assets, then the banking companies should create a provision for these non-performing assets. The RBI also suggested that the percentage, mandatory percentage or the percentage required as a provision for this kind of assets. First one, for standard assets, the banking companies should create a provision of 0.25 percentage. For standard assets, they have to create a 0.25 percentage, right? The second one, substandard assets. For substandard assets, the banking companies should create a provision of 10 percentage of substandard assets, right? The next one, doubtful assets. If the doubtful assets are secured, right, then If doubtful assets continue as a doubtful assets up to 1 year, then the required percentage is 20%. If the doubtful assets continue from 1 year to 3 years, then the required percentage is 30%. And third one, if the doubtful assets continue more than 3 years, then the required percentage is a 50%. Right. The last one, loss assets. For loss assets, the banking companies should create a provision 100%, because loss assets, the banking companies, they are not able to recollect those kind of loans and advances, right? Once the banking companies collect all kind of once the company create a provision or all kind of these non-performing assets, then they take the total provisions, and these provisions should be shown in balance sheet, in liabilities balance sheet under the head schedule number 5 under the head other liabilities and provision. So this amount should be shown in balance sheet in liabilities under the head of liabilities and provisions schedule number 5. So this amount should be shown in the other liabilities and provisions. So these are the provisions that banking companies should create for their non-performing assets. Thank you.